What's going on, guys? So the Fed just approved a single 25 basis point cut, and I'm going to go over what's expected for the rest of the year and even 2026, and then take a look at the prices of crypto, altcoins, gold, silver, the stock market, interest rates, everything. So I want to jump into this video, just go over some clips talking about what happened today.
Fed just delivered an interest rate cut, and it is the quarter-point cut that was widely expected. Now, this is a big deal because it is the first interest rate cut of the second Trump administration, and it's sending a clear message that Federal Reserve officials are more worried about the slumping job market than they are about stubborn inflation.
So he's talking about, again, the dual mandate that the Fed has: labor market and inflation. And right now, they're more worried about the labor market, about the jobs market, than they are inflation.
They're acting now to try to shore up the job market before this trouble turns into something worse. And they're signaling this concern in their new statement that they just put out by inserting some new language that I'll read to you now. Fed officials say that job gains have slowed and the unemployment rate has edged up but remains low. Fed officials also say that they have judged that downside risks to employment have risen. Now, at the same time, this statement also says that inflation has moved up and remains somewhat elevated, which just gets at this really difficult situation facing the Fed, where they're really trying to fight a two-front war, right? They're trying to fix the job market and they're trying to defeat inflation.
Let me take a look at Bitcoin. 115K, no changes. ETH, $4,500, no changes there. Bitcoin dominance down a little bit, but really not that much. The market has absorbed this really, really well. The S&P is 6,600, so no real change today either. Because the 10-year went up a little bit today. The dollar actually went down quite a bit today, which you can see here, the lowest since 2022. So that is significant as well. So let me get back to this.
This was actually almost unanimous. It was an 11-1 vote with Fed Chair Jerome Powell, joined by 10 of his colleagues, including Fed Governor Lisa Cook, who the president has tried to fire. The one dissenter is the Federal Reserve's newest member. That's Stephen Miron, the Trump loyalist and White House economist. Not surprisingly, he was in favor of a bigger cut of 0.5 percentage point.
So that's pretty interesting, right? So Trump's pick for the Federal Reserve Chair, Stephen Miron, has been confirmed by the Senate. And take a look right here, 2023 and 2022. He says Bitcoin fixes this as a reply. So take that for what you want. We have, again, a new Fed chair saying that Bitcoin fixes this. Trump loyalist, he was the only one to say we should have a 50-point rate cut.
The key change with the Fed's projections is they're now penciling in a total of 3 interest rate cuts this year. Today's and 2 more quarter-point cuts. Now, that's a shift from June, when Fed officials had previously just penciled in 2 interest rate cuts. Now, what does all this mean to everyone at home? Well, the fact that rates have come down, that could be helpful for people who have credit card debt and people who have floating rate debt like home equity lines of credit. But we should be clear, this is not a silver bullet that's going to fix the economy. Interest rates do remain high. The Fed spiked interest rates 3 years ago to try to fight inflation. That amounted to slamming the brakes on the economy.
If rates go down, right, we could see people with revolving credit card debt possibly pay less a month. Same with buying a car, and TBD whether it'll positively affect mortgages. But a lot of people were like, dude, retail is not coming back because nobody has money. I think that if people are paying less for debt, even if that is crappy debt like credit card debt, people will take extra money. They'll feel like they are richer because their payments are lower possibly, and they'll go ahead and buy altcoins with that. I still feel like that is on the table. And he also said, again, they're penciling in 3 rate cuts for this year, which is different than what they were thinking was going to happen in June. So right here, the market now sees a base case of 4 more rate cuts by September of next year. So 1 year from now. And this is a historic pace of rate reductions into increasing inflation. I'm talking about buying homes. So home buyer demand hits its second lowest level on record, near the 2009 low. So how many people are wanting to buy homes is still super, super low. So possibly mortgage rates would need to drop enough to incentivize over half the people that own homes with less than 4% rates to move. I mean, that's one way of looking at it. Or there is a shortage in the housing market as well, where they just need to build more homes. A lot of ways to look at this. So a couple quotes from what Powell said today, coming from Ben Cowan. Powell said it's not incredibly obvious what to do. And I actually did catch a lot of what people were asking him. And he seemed to be what a lot of analysts are saying, like he has these two mandates, right? The labor market and inflation. And he is stuck in a hard place, and there really is not an easy way out. The labor demand has softened, activity in the housing sector remains weak. The median participant projects that appropriate level of the Fed funds rate will be 3.6 by the end of this year, so quite a bit lower than where we are now. So other than a couple altcoins really pulling up the market, it's been kind of a mixed day today, or kind of a boring day. For the week, still kind of mixed. So that is it for the video. Obviously, we are going to see more rate cuts this year and probably into the next year as well. And the summary is this is good for people that have assets. This is good for people that have Bitcoin, ETH, and altcoins. This is good for people buying the index, buying equities. And I think we're going to see new highs for Bitcoin, ETH, Solana, XRP, the stock market. Everything is going to hit new all-time highs. Now, I do believe there will be a lot of volatility, though. I still think there could be some gnarly wicks for Bitcoin. I could absolutely see a Bitcoin wick down to 100K. Because that would wipe out so many people. And that would only be, like a 15% drop, which is nothing. So, just be safe if you're playing with leverage. BTCC is the only place that I do play with leverage right now, and I do trade because they have super low fees. Trading on exchanges that have high fees will literally cut into all of your gains. Trust me, I know this from experience. So if you want to check out BTCC with their bonus on first-time deposits, you can do so using my link below. But other than that, guys, that is it for the video. Hope you're doing well. Leave your thoughts below with what you think is going to happen over the next couple weeks and months. And that's it. Till next time, talk with you soon, and bye for now.